Welcome to our channel Rathish Chartered Accountant. Today in this video, I'm just saying about you acceptance of a deposit by a company or a non-banking financial company from abroad and a proprietorship company also. So first we can discuss about the acceptance of a deposit by a company or a NBFC repatriable basis. That is, it can be returned back to outside India itself. If you are a company or a NBFC and you are in shortage of funds and you want to get some money from the abroad or somebody is helping you from the abroad, how could it be made? That's what I'm discussing in this video itself. So first of all, the deposit should be in the nature of the public deposit. A public deposit means you should have to make a request for them in the public domain itself, and they should have to give the deposit in the public through the channel for which you have accepted the request, or through which you are just making the request itself. Then deposit should be made by a company or a NBFC. NBFC means non-banking financial company. If it is a NBFC should be registered with the RBI, that is Reserve Bank of India, and should have the credit rating equivalent or the credit rating as per the guidelines set by the RBI itself. If it is a company, it should be an Indian company registered under the MCA. That's a normal thing itself. If it's a company, it should be registered under the MCA itself. MCA means Ministry of Company Affairs itself. If it is an NBFC, rate should be not more than what as set by the RBI. Interest should be the rate as prescribed by the RBI itself, or it should not exceed the rate as prescribed by the RBI. If it is a company, rate of interest should be as per the company's deposit of acceptance rules 2014. In that way, you can pay the deposit also. Inward remittance, that is company deposits that is coming from outside India, should be through an authorized dealer. Authorized dealer means a bank, a commercial bank or other banks which is authorized for the foreign exchange dealers. Deposit should be come through NRE or FCNRB accounts itself. It should not come through any other accounts itself. It should come through NRE or FCNRB accounts. The deposit amount should not exceed 35% of the net owned funds of the company. That is, net owned funds means the assets minus liabilities, excluding the capital of the company itself. It should be for a maturity period, because you are just making it as a fixed deposit or something like that. Deposit should have a maximum maturity period. So the maximum maturity period that is set under the FEMA Act is 3 years. Over and above the 3 years, you can't accept the deposit. So if you are accepting a deposit, it should be for the 3 years, and after 3 years you should return back the deposit and then renew it back itself. In that way, you can make the deposit to a company, and the deposit that is made should be used by the company for its business purpose itself. It should not be used for re-lending. It should not, that is, if a company accept a 10,000 rupees or something, for example, a 10 lakh rupees from abroad India, the company should not use that 10 lakhs to make a loan to another person or another company itself. It should not use for re-lending purpose. But there is an exemption for NBFC, because NBFC is a company, it's a non-banking financial company. So it should not be used for the re-lending purpose. The NBFC is a company, it is acceptance. By the definition itself, MPS, and what is NBFC? NBFC is acceptance of deposit. It is can be accept deposit from any other person, and it can re-lend to a person. So it is just like as a bank itself. So for the re-lending criteria or the limitation, NBFC is excluded. So NBFC, if a deposit is accepted by an NBFC, it can be re-lended also. Otherwise, for a company, it cannot be re-lended. And both the companies and the NBFC should not use this money or this deposit for agricultural activities. That is, it should not be used for agricultural activities in India. Agriculture means whatever thing that is what is grown from the soil. That is called the agricultural activities. And it should not be used for plantation purpose also. Plantation means for the tea plantation, coffee plantation, or plantain plantation, whatever be the plantation, rubber plantation. That is just like as a subsidiary of a agriculture plantation. And also the re-lending or the deposit money that is received to the company should not be used for the real estate purpose also by the company or the NBFC. NBFC can give loan for the real estate purpose. There is no issue for the loaning purpose itself. But company or the NBFC should not use directly for the real estate purpose. Real estate means whatever the real estate comes as per normal dictionary definition is that for the building, construction, flats, commercial buildings, and also for the road construction also just comes in the real estate. So it should not be used for real estate, plantation, agriculture purpose. And the company should not give this money or not invest this money in any other company doing these kind of activities, that is re-lending or real estate, agriculture, plantation, etc. You should have to pay the interest for this deposit persons. That is, an NRE person, you should have to give the deposit. Normally, you should have to give the deposit. So, repayment of the deposit or repayment of deposit interest should be paid through an authorized dealer. That is, you should pay through the banking channel itself. And it can be paid only through an NRE, FCNRB or an NRO account if the customer desires or the customer demands itself. So it can only be repaid through an authorized dealer, and it can only be paid through NRE account of the customer or the FCNRB, I just described it in the last video, and through the NRO account also. These are the repayment of the deposit itself. So after the 3 years, I just told earlier that is the 3 years is the maximum criteria for keeping the loan. So you should have to repay the loan or the deposit after the 3 years, not loan for the deposit itself. So the deposit can be repaid through the authorized dealer. An authorized dealer means a banking concern itself. So it can be repaid through the NRE or FCNRB account of the customer itself. It cannot be repaid through any other account itself. If the customer at that time of the repayment is a NRE person or a non-resident outside India, it can only be paid through the authorized dealer and NRE and FCNRB account. It can also be paid through the NRO account also if the customer decides itself. So if the customer at that time of the repayment just becomes an Indian resident or it just comes back to India, then it can be paid through the normal bank channel to him itself. Money is absolutely repatriable. That is, it can be, the deposit can be repatriable to the outside India. In that manner, it can be made. So while at the time of the repayment of the deposit, company or the NBFC should give a certificate to the authorized dealer. That is, the certificate should be that it's a self-declaration, like a self-declaration. It is not said that it will be certified by any other professional or something like that. It should be certified by the company. The inward remittance, that is the deposit, was received at the time earlier through an authorized dealer and through the normal accounting channels, that is NRE or FCNRB accounts. These are the rules that can be provided when a company accepts a deposit from an NRE or a person of Indian origin to NBFC company itself. So in short, I will summary of that if a company is accepting a deposit from a NRE or a company is an NBFC also, the criteria are that it should be made through the public deposit scheme itself, and you can pay rate of interest. If it is a company, it should not exceed the company's acceptance deposit rules, or if it is an NBFC, it should not exceed the rate of interest as prescribed by the RBI. If it is the accepting company is an NBFC, it should be registered with the RBI and it should have a credit rating as prescribed by the RBI. If it is a company, it should be registered with the Companies Act itself. The maximum period of the deposit that can be kept by the company is 3 years. There is a limitation for the deposits keeping by the company, that is, it should not exceed 35% of the net owned fund of the company. The deposit can be repaid outside India. It can only be repaid through an authorized dealer. We should have to give a certificate to the authorized dealer at the time of the repayment that it is accepted through the normal banking channel or through the authorized dealer, and it should be paid back through the NRE or FCNRB account. In the same way, the interest can also be repaid through the NRE or FCNRB accounts itself, repatriable also. A deposit should not be used by the company, should not be lent by the company for agriculture, plantation or real estate purpose. It should not exclude for NBFC. Thank you for watching my video, Rathish Chartered Accountant. Hope all of you enjoyed this video. Put your comments in your comment box itself. This is Rathish signing off. Thank you.